Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
The only thing that will help is the culture and the trust. And the trust we can gain from our customers. So if you look at what I would love to do in the business side, win more and more trust, right from employees, shareholders, customers, partners, whomever we interact with. We want that trust. When we say some things, we really mean it. Whether we have a signed document or not, doesn't really matter. Our handshake should be as good as our document.
That was Vijay Oddiraju, the co-founder and CEO of Volante Technologies, and he is our special guest this week. This is episode 98 of the Leaders in Payments podcast, and I'm your host, Greg Myers. And hey, before we get started, if you haven't heard already, next month, July, is Women Leaders in Payments Month and is being sponsored by American Express. Go to leadersinpayments.com to see more information, including our lineup of amazing guests. A special thanks to American Express for being our sponsor. Now, back to the show. Vijay was born and raised in India. After getting his bachelor's degree, he came to the U.S. where he got his master's degree in computer science and went to work for Oracle. After about 6 years, he got the entrepreneurial bug and started his first company. Vijay, along with 3 other founders, started Volante in 2001. Currently, the company offers cloud payments and financial messaging solutions to financial institutions. They have over 100 customers in 35 countries. The first real-time payments transaction in U.S. history went through their platform. In August of last year, they raised $35 million in capital from Wavecrest Growth Partners and other strategic investors. Many of them are existing customers. Vijay has a professional passion to build and maintain a company culture based on trust. On the personal side, he has a passion for space and looks forward to hitching a ride with Elon Musk or Jeff Bezos into space. We've got a great episode today, so let's get started. Hi, Vijay. Thank you for being here and welcome to the Leaders in Payments podcast.
Hi, Greg. Thanks for having me here. It's a pleasure to be here.
Thank you so much for being here. So let's dive right in. Tell our audience a little bit about yourself, maybe where you grew up, where you went to school, where you currently live, a few things like that.
Sure. I was born in India. Most of my life until I came to US was in India. I didn't go anywhere else. After my engineering, which is a bachelor's degree, I went to US and then did my computer science master's and then joined Oracle as one of the software engineers there and been there for 6 years. This was in California, Redwood Shores, their headquarters. And afterwards, I guess the Silicon Valley has a lot of bugs which bites a lot of people there. And that one of the bugs bit me as well and I became an entrepreneur.
Well, let's talk about the company Volante. Tell our audience what Volante does.
We are well known for payments platform and also the message integration platform which we have. Those two go hand in hand. But if you look at the crux of it or the value which we bring to the customers is bringing a lot of automation to make things much easier, simpler for customers. That is the crux of what we do actually, more and more automation. So right from message integrations or data flow or data integrations, we brought in a lot of innovation to make it automatic. A lot of automation was done so that customers don't spend huge amounts of time to bring new products to the market. So we help them out to bring new products to the market much faster, and then they should be able to maintain them easily and things like that. And similarly, the payments product, which we brought out, also did the same thing. And one of the classic examples I keep quoting is we were able to help one of the customers go live, which is Bank of New York Mellon, which is a public information. The first transaction, the real-time payments transaction that happened in the US history has gone through our product for Bank of New York Mellon, obviously. But that was done in a record time, and we are very proud of that moment as well. But that all was possible because of the automation which we bring. So whatever the software we provide has built-in capabilities of lots of automation. That's the crux of it.
And when you say customers, I know you sell into financial institutions, but are there other markets that you sell into?
So our customer base is all financial industry, mostly banking. Even some customers we have in the capital markets, but mostly banking. And then we just started last year to get into insurance space as well, but that is at a very infancy stage. Let's give you a background if you don't mind. We started in 2001, been in the business for the last 20 years. And then we have offices headquartered in New Jersey. We are Delaware incorporated. We have offices in Boston. We have offices in Mexico. We have offices in Colombia. And then we have office in London, which takes care of London, the UK, and the European market. And then we have an office in Dubai, which takes care of Middle East and Africa. And then we have 3 centers in India. A lot of R&D work is being done in India. There are 3 centers in India. Altogether, over 1,000 employees we have. This is a brief background about Volante. All over the world, have more than 100 customers, mostly banks doing the payment side, and then some capital market customers, and then just started an insurance domain as well.
Do you go to market through your own direct sales force, or do you go through partnership? How do you go to market?
Predominantly direct sales so far, but we started quite a bit of things this year in terms of expanding our relationships in a market to go through some partners who have been working very closely with us with lots of implementations which we are doing. But predominantly, so far it has been direct sales.
And I read in August of last year, you raised $35 million. And I think it's interesting from 2 perspectives. So I'd like for you to talk a little more about it. But one perspective is you did it in the middle of the pandemic. And the second is you'd already been in business for 20 years and decided to take on an investment. So kind of curious about that investment and why you did it and how you're using those funds.
Very good question. Sorry, I should have mentioned it myself, I guess. But nevertheless, I'm glad you asked that question. The process of fundraising started before actually the closure, right? So we started late, I would say 2019, like December timeframe, just the initiation of the process. And then it took some time. But the good thing about this process was we were able to meet with lots of good investors. And even though there was like a huge surprise with the pandemic, all the lead investors whom we were trying to go with, they didn't change any of the terms or anything like that because of the pandemic, which was very satisfying for us because we were thinking that because of the pandemic, the valuations or the terms could change and all that. But that didn't happen, which speaks volumes about their integrity, actually, from my point of view, which was very nice. And then the second thing is main question you were asking, why didn't we raise the money for 20 years? And then what are we doing with that money? What we have done is, initially, when we started in 2001, just after September 11th, we started, and after the .com bust, actually. So there was not much money available in the market to raise. That was one reason. The second reason is we ourselves thought we want to grow business to a certain extent, and if it's required, at that point, we'll look at these things. So we started with that notion saying, let's not go and spend our time raising money or capital, and then we will also see how far can we go on our own to capture the market. So that was the intention. And very quickly, we were profitable and we didn't have to go and raise money. We were able to reinvest into the company and just went on like that. But the interesting factor is in 2014-15, when we started looking at getting into payment space because of the customers' needs and the market demand, then we felt there is a huge market opportunity out there, and growing and capturing a bigger share of the market would be possible by investing more at the right time. And we felt that was the right time for us to do it. But we wanted to get some proof points to do that. So we grew a little bit more. And then we went for investment round and then our capital round. And then those funds are used for quite a bit of things because the market opportunity has exploded. And even during the pandemic, I guess it's unfortunate that that has happened to the human race, I would say. And lots of families, individuals lost their loved ones. But on the business side, there was a need that was created for the banks to be a lot more modern so that they can increase the efficiencies to reduce the friction points in making payments happen. So that modernization has taken huge precedence. Because of that pandemic, what happened is people who are planning to do modernization programs or projects 4 or 5 years from now, they're all bringing them forward. So all those things are helping us out to expand the market share for ourselves. And the timing was perfect because when we got the money, we started investing in the right resources, in-country resources, sales force increasing and whatnot on all fronts. Like also because we didn't have the external funding, we were almost like, even though we have been in business for a very long time, we are still behaving like a small startup where there were not many systems in place on the back office side. Most of this stuff was given to third parties as outsourcing. Now what we did is we brought all of them internally so that we can serve our customers in a better fashion. Now it's a true company with lots of investments going in the right places and for the growth.
What would you say differentiates your company from your competitors? I know everybody has competitors out there. So what would you say makes you unique or different or better than your competitors?
A very good question again. When we started the company, right, in 2001, again, even though we didn't raise the money, we were talking to some of our good friends who are in the investment community, and we were presenting our business plans to see what they think about it, what holes we have, and correct ourselves and all that. And some of them were very good feedbacks. They were giving us saying, if you are entering a market where there are already products out there, your product should be 10 times better and 1/10 the cost of the current products out there, things like that. We took that feedback very positively, and obviously our product was unique, and even though we are serving the same purpose as some other vendors, but the way in which we are addressing it by automation and lots of innovation that brought into the product, which eventually helps the customers to solve their problems in a better fashion. What we believe in is product and services are one portion of the differentiation. And there is other parts of differentiation, and that's very important. The first and foremost one is how do we partner with our customers and become a trusted partner so that we can work with them not just to solve one issue or just one project, but become a strategic partner for them to help them out to add lots of value and in a way which they can add a lot more products to their customers and add value to their customers. So I think if you say products, everybody will catch up on the differentiations, on the technology or the features and all that. What we say is, along with those things, which we always keep a lead on those things, one differentiating factor is truly become a trusted partner with our customers. And today we have a little over 100 customers. Almost all of them are still with us. Some of them have not with us, who have been bought over by bigger companies or bigger financial institutions, whereby there's some duplication of the products there. That's where we don't have them as a customer anymore. But most of the customers who are independent still and licensed our product, they're all still our customers, and all of them are referenceable customers as well. So I think our success is because of the differentiation that we bring, is that trusted partnership, I would say.
And we didn't touch on this, but how do you price the product? Is it sort of a platform license fee, or how do you price the product?
So initially, when we started out the company, our pricing model was typical software, enterprise software pricing models, where you license the product and get a perpetual license, and then or a term license, and then every year you get the maintenance out of it. And then eventually, as the time progressed, we made it more into subscription-based pricing. As one of the products we have or offerings we have is called payments as a service. That's completely on a subscription basis. Just like a software as a service, it's a payments as a service product. We call it as PaaS, and that is based on a subscription base. So today, all the pricing models which we have are subscription-based model, which is all recurring revenue every year.
You already mentioned one of the trends that you've seen in this industry, which is really these financial institutions increasing the amount of automation and modernization programs that they had planned out many years, and they've pulled those back and are really making those investments now. But what other trends do you see in the industry, say, in the next 2 to 3 years?
2 to 3 years, everybody, small, big, medium, all kinds of banks are looking at modernization. One trend we are seeing more and more is moving to the cloud, whether it's private or public or a hybrid, everybody's moving to the cloud. And 5 years from now, at least my prediction is going to be banks will not have their own data centers. They will be relying on cloud, moving most of the stuff to their clouds, whether it's private or public cloud. So 2 to 3 years, a lot of frictionless, at least in the payment space, a lot of frictionless payments, less checks. Checks will become obsolete, more and more digital payments, more towards movement to the cloud is what I would say the main things that will happen. The reason why we are so excited about that is the cloud technology is amazing actually. And because what we have done is we have not just taken a product and retrofit it to enable it to work on cloud, but what we have done is we have created a platform which is cloud native and with all the modern architectures like the microservices and built in a lot of resiliency for active so that their zero downtime they can have and there won't be a single payment that they will miss. So all these things are helping us out quite a bit to be a major player and making us become a leader in that whole journey in the next 2 to 3 years. Already in 2020, we had the largest number of new customers signed up when compared to any of the competitions we have in the marketplace. So we are already leaders right from 2020, but I think as we go forward, the distance between us and the competition will be a lot more because we are a company that has built the software for the cloud and it will be on the cloud and the journey for all the financial industry or the banks are going in that direction.
What do you think about these other companies, sort of fintechs that are starting to offer other banking services? I mean, you've got Square and Amex through Cabbage doing checking accounts. And I think that's sort of just the beginning of more and more fintechs offering banking services. What is your view on that and how does that play into your business?
That's one of the reasons why we are getting a lot of traction from the banks actually, because banks are worried about the competition, where it's coming from. Most of the competition is coming from non-banking vendors. Even if it's a banking vendor, they're doing something innovative. And the customers whom we are talking to, or prospects whom we are talking to, they want systems which are very agile and very flexible so that they can meet the demands of their customers and also provide services which are similar or better than their competition. That's one of the reasons why all the things which I talked about, the automation which we brought in, the flexibility, or the innovation which we bring in, helps our customers to better. So whether these companies which are there, like Square and all that, will they be doing what we are doing or are they our competition? No, they are not our competition. But they are helping us in such a way that we are able to enable banks to do better things to their customers. And all these fintechs are really coming out with some innovative ideas, which banks, most of the times, I would say not all the time, but most of the times are reacting to those instead of being proactive. But with more modern technologies and architectures, if vendors like us can help them out, I think they will be in a position to do a lot more to their customers, to serve their customers.
That's interesting that you're helping to position them as being more proactive as opposed to reactive, because being on the offense is much better than being defensive, that's for sure. Another quick question about the company. You mentioned banks, small, medium, and large. Do you serve all size banks from community, mid-tier, all the way up to obviously the largest ones? I know you do, but what about small and medium-sized banks?
What we have done is initially to build the credibility, we have chosen as a strategy to go and serve the tier one banks. And you have seen that, or at least you know about it. That's one aspect of it. As we gain a lot of good credibility in that market segment, then we started looking at medium and smaller sized banks. And we're getting a lot of good traction now this year. Last year, we started this initiative for the PaaS product, which I was talking about, payments as a service. That is the product which is getting a lot of traction with the small and medium-sized banks. Because today, smaller banks are not worried about cloud because all the major banks already have cloud deployments. These smaller banks would like to have the same type of resiliency, same type of performance characteristics and serve their customers similar to the bigger banks, but with not having the overhead of maintaining their own data centers and IT teams and all that. So all of them are looking at services like PaaS, which we provide through our Volante product. Yes, our traction with these medium and small banks is gaining a lot this year. I would say initially last year we had like maybe less than 10% of our market revenues coming from that. But this year we're looking at almost 40%.
Interesting. Well, let's switch gears a little bit and talk about you. So you mentioned earlier a little bit about your background and you were at Oracle and then you got the entrepreneurial bug. So maybe fill us in between Oracle and co-founding Volante.
So because naturally when we came from Oracle, Again, within Oracle, I have done various functions or fulfilled various roles in different jobs there. But towards the end, I was mostly in the customer front, doing lots of customer related activities. That gave me a good sense about what the customers generally look at in products. But naturally, because of the expertise we had with the Oracle products, we thought it will be much easier for us to start something around Oracle products. And we thought we'll develop some IP around those so that we can partner with Oracle. That was a natural tendency for most of the entrepreneurs who come from a bigger companies, I guess. So we started that company doing services, meaning consulting services or high-end consulting services around Oracle products. But after running that company for a year, for some reason, I would say, or for a good reason, I guess, coming from a product background, we didn't really enjoy the job of providing services. We felt we would rather not look at services around one product or services in general, but come out with something which is very unique to the market and create a product and take the product to the market. So after 1 year, I would say 1.5 years, I would say we were doing very well in terms of the revenues and getting the money into our pockets and all that. It was very good from the financial point of view, but we were not enjoying that job that much. So what we did is we said, this is not going to work for us in the long run. And we informed a handful of customers whom we were serving at that point saying, we are going to close down this consulting services business. And we gave enough time for us, ourselves and for the customers for us to transition out. In the next few more quarters, we were out of those engagements. And then we started thinking about what products we need to do. What we did is that was in the inception of Java and .com boom, actually. So we did an app server company based on J2E technology from Sun Microsystems. But we were a little ahead of times, I would say, from that, what we were trying to do. But again, that was a good success for us. We merged our company to a bigger company and there was a nice exit for us. But obviously it was not a home run, but it was a good exit. And then after that, we had the confidence that engineering wise, we are very good. We have the talent to produce the products which we want to take to the market. So when we started Volante, we did a lot of market research to begin with and see what the needs of the customers are and put a lot more focus on the customers and more customer-centric products is what we started building instead of just building those products in the lab and see where it sticks. That's where we got a lot of good traction and built a lot of credibility and trust with our customers.
And you have 3 other co-founders, right?
Right now, we have 2 more along with me in the company, but we have more, but they're all personal reasons they have to go out, but they're still very good friends and shareholders and supporters of the company.
I like to ask this question when there's multiple co-founders. Can you kind of talk about the dynamics of having that many decision makers and founders of the company and sort of what the dynamics are like in that situation?
Interesting question. That's the beauty of it, right? See, most of us actually, or all of us have worked in the past together for the last, along with this 20 and then the previous years and the previous startups. And all along we have been working together, including Oracle days. So it's very interesting that all of us have been together for a very long time. So we know what each of us brings to the table, the strengths and weaknesses. So we complement each other very well. But when it comes to decision, we all discuss this. Everybody conveys their opinion. And there is the majority, then we go with the majority. If there is no majority, and if there is a conflict or whatever it is, all the decisions are left to the head, which is me right now. That decision will be taken by the CEO, and then everybody follows that decision. So that's how the arrangement is. It's pretty healthy environment which we created right from the beginning. We allow everybody to voice their opinions and have even voting within the founders. And then if there is a tie, then the decision will be with the CEO.
Okay, interesting.
It worked very well for us.
Sounds like it if you guys have been together 25, 30 years working together. Obviously, however the dynamics work, they're definitely working.
Right. Yeah, as you can imagine, if you're working so long, we know the chemistries and all that. And actually, one of the questions you were asking, where do I work from, I guess, I don't remember the exact phrasing of your question, but I was in the US until very recently, but I moved back to India to take care of my parents because they are old and wanted to spend some good quality time with them as they're aging. So I'm working remotely from India now before even pandemic started. But the reason we have such a good progress, including the fundraising and all those kinds of things, getting into the payments industry, all that happened only after I came to India. The reason why it still works very well is because we know the chemistry of each one of us very well. So when we talk, even if we don't see the faces, when we say certain things, we all understand exactly what they mean, what they want. And there's a lot of weightage that we need to give as co-founders, I guess, or as a team that has been working together for a very long time. So it really doesn't matter where we're all situated. That helps a lot, actually, when you work for so long. You know what each individual is all about. When they ask a question, what is that they're looking for? And it's so easy for us to communicate. That's the point I'm trying to say. But it worked very well for us, regardless of where we are working from. Even though we are like more than one founder or two or three or four, it doesn't matter.
What are some things you're passionate about? So maybe one personal thing and one business related thing.
Interesting thing is, I'll tell you lots of things, I would say. Not that I read a lot, okay, but always like this, right from childhood, I guess, since Neil Armstrong went to the moon, I'm fascinated with space quite a bit. So when all these guys, Elon Musk and Jeff Bezos and all of them are trying to do space commercialization or space travel as commercialization, I feel like I would love to be one of their passengers anytime soon, whenever they open up for the public, and if it's affordable to me. That's one of the really out of the world experience I would like to get. On the business side, this is an interesting aspect of it. I look at this as, again, I come back to these partnerships which we talk about. See, a company will not be there for decades together. A company has to last, means the culture has to be built. And the culture which we built so far and we want to continue to build or retain is the trust factor. I think if you look at one service, one product will not help you to grow the company. We want to grow the company and sustain and be a leader for decades to come. The only thing that will help is the culture and the trust. And the trust we can gain from our customers. So if you look at what I would love to do in the business side, win more and more trust. Right from employees, shareholders, customers, partners, whomever we interact with, we want that trust. When we say some things, we really mean it. Whether we have a signed document or not, doesn't really matter. Our handshake should be as good as our document. That's how we want to work.
I love that culture answer and building trust. I think that's a great thing to strive for and obviously makes companies better. And I will say this, Vijay, I've done 99 interviews. You're the first one that has said they wanted to go to space. So you get the award for the first one that is interested in going, I guess, I don't know if it's in space or to the moon or to Mars, but either way, you're the first one.
I would be satisfied with going to space to begin with. Then we'll see how it goes.
Great. Well, Vijay, we've covered a lot of ground today about you and the company and the industry. Is there anything else you'd like to add before we wrap up?
Again, I would say to everybody whoever is listening, business is important. If you do the right things, money is byproduct of it. Or by business itself will be a byproduct of it if you do the right things for your customers. So any startups or whoever it is, whoever the entrepreneurs are, whoever listening to this, I would say focus on the customers, doing the right things for the customers, and everything else will be a byproduct. That's one. The second thing is, please, in this pandemic, we don't know how it's behaving, how it's going to be. Hopefully, we have come to an end of it and we don't have to deal with it anymore and we can forget about it. That's my hope. But until that, we are all confirmed to have that environment. Please take care of yourself and your loved ones. It's very, very important because it really doesn't matter what we do if we don't have good health. So I would say all the best and wish everybody a wonderful, healthy life.
Well, Vijay, thanks so much for being on the show today. I know your time is very valuable, so I really appreciate you being on.
Thank you. It's a pleasure. I really enjoyed the conversation.
I did as well. And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.